Let's stick with banking then and talk about CSB, the Catholic Syrian Bank. CSB Bank also came out with the first set of Q1 numbers earlier. Pralay Mondal, MD and CEO of CSB, is now joining us to talk more about the business. Pralay, thank you very much for joining us this morning. First, let's talk about the advance growth. You were eyeing 1.5 times industry growth in terms of advances, and the reading has been pretty good, although the gold loan portfolio grew much more strongly. That part, which part do you think will lead the growth this quarter? Which are the ones which are slightly softer in your view?
What we have done is 2-3 things has happened. One is, like last quarter, we have been a little conservative on the wholesale side of the portfolio, primarily because we are running off some of our older portfolios at this point of time. We have got a new, very senior team who has joined in our wholesale banking right now. So I've told them to ensure that whatever segments they want to focus on, they should, and whatever they don't want to, let them either exit those relationships or those kind of segments, so that we have a clear strategy in the long run. So the wholesale banking growth will start coming back next year. This year, we are kind of normalizing that portfolio. And hence, you will see that wholesale growth has not been good this quarter as well. And that will be the story for this year, more or less. The second thing, what has happened is the DA portfolio, which we had, a gold DA portfolio we are running off, and we don't intend to really increase that portfolio this year at this point of time. And DA portfolio is a part of the wholesale banking. And that itself has created some growth-oriented issues on the wholesale side, but those tactical, not very strategic kind of decisions. So that explains on the wholesale side. SME has grown well for us, and gold has grown, as you say. And retail also, we have sort of taken a step back on the unsecured side of the business, whether it is on the personal loan or on the credit card side of the businesses. And we have also been a little more careful on some of the other businesses which are unsecured or semi-secured in nature, because overall, the scenario on the retail side, we want to be a little cautious at this point of time, especially which are semi-secured or unsecured. Otherwise, I think we have grown faster than the system. Hopefully, we don't know still the full system numbers, but I think we should have grown faster than the system. But as we grow through the next few quarters, our growth should start picking up further.
Right. Morning, wanted to also discuss your deposit growth. This quarter was largely led by the term deposits. Your CASA growth was lagging. And this was the case in Q4 as well, if I'm not mistaken. Are there challenges when it comes to your CASA growth? And how do you see the cost of deposits shaping up?
I think the overall system has a little bit of a challenge on CASA because of 2 reasons. One is still the deposit rates are higher, and also because there are more efficient instruments right now for people to use CA and SA, by which the reason for keeping high balances on CASA is coming down, like CMS, UPI on the savings side, and those kind of points. And people are putting money somewhere else also. So I think that's broadly the industry phenomena, where industry has also come down by 400 to 500 basis points. And we have come down a little more than that. Also, but I've always said that we are still building the CASA franchise. We still don't have a detailed, robust CASA franchise. We are investing a lot into technology. We are investing a lot into products, processes, etc. Building a CASA franchise needs a 360-degree view of the customer with all product services and distribution. We are growing our pan-India presence. We are getting into those markets which have larger liability and CASA kind of opportunities. So given that perspective, I think you will see our CASA franchise starting to pick up only FY26 onwards. Even FY25 will be a muted CASA for us. And the reason I said that we are building the technology products processes around it.
Right. Pralay, recently we also saw a block deal where FIH Holdings sold some stakes. So has the fund fully exited? At the same time, some marquee names like Amansa Holding, Ashoka Holdings, Abu Dhabi Investments. What kind of discussions have you been having with these investors?
Yeah, so I think the block deal which you saw was a part of the regulatory compliance which the promoter group Fairfax had to do. They had to bring down their stakes to 40%. Given a choice, they wouldn't have, but I think it was a part of a regulatory kind of a process which they had to flow in the glide path which they had. And we knew that this has to happen. The good news is that we have got very strong hands and very strong investors who has come in, which actually talks about the trust and faith which some of these market investors have on the bank's long-term vision. We are not looking at anything next quarter or next year. What we are building is our SBS 2030 next 4-5 years vision. And I think some of the investors, when they came, engaged, talked to us, I mean, these are big names, right? Adia, Amangsa, then Oaktree, DSP. I mean, there are many such very marquee names out there. And all ICICI Pro, Sundaram, I mean, these are very big names. So from that perspective, I think we have been able to tell our story and people are believing in them. Of course, we have to deliver that because they are long-term investors. They want to see how we are building the franchise. And I think what they liked is that we are not playing short-term in terms of next quarter or next year. We are building a sustainable long-term mid-sector bank, which I think they liked it. And of course, now is the onus on us to deliver.
Right. Pralay, in terms of generating wealth for investors, what is your outlook in terms of ROA and ROE improvement roadmap from here?
See, what will happen is, I mean, based on my past experience on various organizations or banks which has done well in the long run, is we have to have a long-term compounding growth story, and we have to have the right building blocks to build that compounding growth story. So we told our investors that we will focus on governance, technology, human capital leadership, and compliance and customer service, and what we are doing to build those building blocks. So we are focused on that. Book value, of course, will come based on the growth and the profitability. We are reasonably sure that we are well on our way to our SBS 2030 journey, where we will have a growth around 1.5 times the system growth. And the growth will be a little more back-ended, which is in the second half of this journey between FY27 and FY30. The reason being that by that time, our liability franchise will be there, because growth in assets is easy, but we have to build a liability franchise parallelly. You cannot just depend on deposits. So those kind of work is happening. And I think they're believing in what we are trying to do. They went into the depth of what our strategy and execution plans are and how we are delivered in the last 2 years in terms of those building blocks. So I'm pretty confident that we should be able to deliver both big book value and multiplier in the long run. But my job is to execute. My job is not to predict the market. So I can focus on the book value, and the multiplier the market will take care of. But based on my past experience, compounding sustainable, predictable growth story is what the market looks at.
Right, and recently as well, we saw some of the banks highlighting stress in the MFI book. Do you also see that building up as a risk for the microfinance segment?
Yeah, if your question is only about MFI, unsecured, enough has been discussed. I think that will, we are seeing what is happening in the system. Specifically in the MFI, there are two things. One is the growth has been robust in the last year for the overall ecosystem. Our growth has been not that robust, but we do businesses primarily through the BC partners. We don't have our own MFI franchise. So to that extent, we are cautious in that business. Especially due to various policies which has got implemented and things like that. So we have to ensure that we follow those processes properly, and we ensure that our BCs are following those things right, like the FOIR kind of a calculation or some of the other things which has happened on the MFI side. So to that extent, yes, we have not really grown that much in MFI. And you can say that's part of our cautious approach we are taking. And we are watching the market. And especially because we don't have our own MFI franchise, we are doing it through BC partners. So yes, we are cautious on that segment right now.
Right, understandably so. But, last quarter we saw a sharp spike in slippages as well, but you were confident about the positive outcome from the account. What's the progress there? Do you see more such one-off events in the first quarter?
See, the resolutions don't happen so fast. I said that it will not happen in a quarter, but I think through this year, we should be able to see that reversing, and we should get better. We are working on that, and we are pretty confident that we'll be able to manage that. Also, on the wholesale side, we are looking at various other conversations we are having, because when you are planning to create a different kind of a segmented portfolio, you would exit relationships, you will take some calls, etc. So this is a year where we are doing a complete cleanup on our wholesale side of the business. And next year, so that next year onwards on a clean slate, the wholesale team which has joined us can grow the business. So to that extent, it could be a slightly aberration for us on the wholesale side, both in terms of growth as well as in terms of the slippages which we may see. But that is not much. That will not really impact. I mean, at the end of the day, last quarter we ended below 1.5, right, gross, and below around 0.5 in net. So, and credit cost was still close to zero. So to that extent, I think if you can manage a credit cost close to even 10 basis points, that's a good performance. So we are okay with that. But yes, specifically on your question, we are going to manage that account well, but that should happen in the next few quarters.
All right, Mr. Mondal, we'll let you go on that one. Thanks so much for joining us on the show.
If you like this video, then like, share and subscribe to ET Now.